In this presentation, we will enter an invoice for a customer, but this time an invoice that has been linked to the purchase order and later the payment. In other words, the scenario being, we had a customer come into our shop, we sell guitars, wanted a specific guitar, we didn't have it, therefore we went to our vendor, issued a purchase order. The purchase order then was received, we received the inventory, we made a payment to the vendor, linking the payment then to the invoice, which we will then be creating now. As we create the invoice for a specific customer, the information we have entered prior to this will then help us to populate that invoice for the piece of inventory that we specifically issued a purchase order for and made a payment for in the past within QuickBooks Pro 2020, QuickBooks Desktop 2020. Here we are in our Get Great Guitars file. We currently have the open windows open. You can open the open windows by selecting the drop down up top and selecting the open windows. Once again, our scenario is that we had someone come into our store. We sell guitars in our store. Someone came into the store, and this first one's going to be Eric Music, and Eric Music's the customer, said they want a specific type of guitar. We don't have it in the store. That's okay. We're going to purchase it from our vendor. We then issued a purchase order to purchase it from the vendor. Remember, the purchase order does not have a financial transaction, does not affect the financial statements. However, it will issue the purchase order as a request that hopefully then we will then receive the invoice and make the payment. We had done so in this case. We then received the guitar from our vendor. We wrote a check for it, recording the inventory on the books, increasing inventory, increasing the sub account related to inventory, tracking inventory by specific guitar, decreasing cash, of course, as we write the check. And also, we're linked this check as we wrote this check. I'm going to open this up so that we can see it and go back. And so this one was for Gibson. I'm going to go back one more. I believe this is the one that we're going to be looking for, and we linked it here, and it has the items that's going to be the inventory item. And we also had the customer, which flowed through from the purchase order, and we said it was billable. That means that when we create the purchase order, we have this billable outstanding item that will be tied to this particular customer, Eric Music. We'll get another pop-up that's going to say, hey, do you want to apply this out, guitar out? And it'll help us to populate that for us, the invoice for us. So let's close this out. We're going to open up our reports. As we do so, think about what's going to happen as we enter the invoice. It'll be much the same as when we saw the invoice prior to this. The linking process is going to be the new system, but we do want to practice this invoice as we go because it's a more complicated document than you would think in terms of recording the transaction. Reports up top, company and financial. We're going to go down to the balance sheet report. We're going to set the date range by going to Customize Report, and the date range is going to be from 01/01/20 to 12/31/20, January through December 2020. And then here is our report. When we create the invoice, we know that accounts receivable will be going up. We know that the inventory will be going up. We'll also have other items on the profit and loss. Let's go to the reports up top. We're going to go to the company and financial. We're going to go to the profit and loss standard. Changing the dates once again to 01/01/20 to 12. That's the 21/12/31/20. Here's our report here. On this side, sales are going to be going up. Cost of goods sold will be going up. Also, sales tax payable on the balance sheet will be going up. We'll take another look at that soon. Then we're going to open up the trial balance report because this is a report that could be useful, and for a transaction like this affecting 5 accounts, then it would be useful to look at it in the trial balance if you want to dig down on this information and see it in one place without subtitles. That's going to go from 01/01/20 to 12/31/20. There's our report here. Okay, back to the home tab. So we're in the home page now. We've entered the purchase order. We've written the check. Now we're going to create the invoice. Same process. However, we're going to see that linking feature. Hopefully we will. I'm confident we'll see it. So we're going to say this is going to be for Eric Music. Selecting the dropdown, we can find Eric Music or, as I would prefer, type it in there, Eric. Notice it starts to populate. Once it does, once it's the only one there, we can then say tab. It will then select it and say, the customer or job you've selected has outstanding billable time and or costs. Do you want to, first one, select the outstanding billable time and cost to be added to this invoice, or second one, exclude outstanding billable time and cost at this time. So if it wasn't the case that we were billing for this particular purpose this time, we might select no, but the second one. But this time, of course, we want to select it. So we're going to keep on the first item and we're going to say okay. And then here's going to be the tab where we can choose the item. Now notice it's got multiple tabs here, so it can be a little bit confusing. It defaults to time because QuickBooks is trying to get you to kind of use its internal time tracker, and that would be a way for us to bill people based on the time that has been tracked. We'll discuss that a little bit more later. And then the expenses tab, then the mileage. We're looking for the items tab. These are other items that could be basically billable type of items. We're looking for the inventory items. So items, remember, if you see items in many contexts with relation to the sales cycles, it means, in essence, inventory items, things we sell, physical inventory. Once we're here, we actually have to check it off. So you want to be able to check it off. Then we could say OK, and it'll basically populate for us. So we chose that item, it populates for us. Notice it even picks up the right number because remember when we made the payment for an ELP, it was less than 500. Like if we take a look at the lists, the item list for an ELP, lists, item list. This is our inventory items. Here's the ELP. Double clicking on it, we paid, you'll recall, 400 for it, and it's populating our invoice at the proper amount that we're charging for it according to the item 500. Unlike other billable items, which of course will just flow over the billable expense to the invoice at the cost, typically. So I'm going to close this back out and close this back out. Now, when we record this invoice, just to review, what's this going to do? The invoice means accounts receivable is going to go up. The other side is going to go to a sales or revenue side. Accounts receivable is going to go up by the full amount, including the sales tax of the 525. The other side of revenue is only going to go up by the 500. The difference of the 25 is going to go to a payable account, a sales tax payable account. Then the other thing that will happen, inventory decreasing by not anything on this invoice, but by the cost that we saw in the item list, $400, and cost of goods sold will be increasing, which is in essence an expense account. Also, the inventory item will be adjusted in the subledger. Let's check all that out. We're going to say save and close. And I marked this to be emailed apparently, which I don't want to do. So I'm going to say cancel that, unmark the email, and then save and close. All right, and then we're going to go over to the balance sheet. Let's check it out, see what happened. We're going to say the accounts receivable, double clicking on the accounts receivable in the balance sheet. This one was for Eric Music, so we should have something in accounts receivable. And notice it's not there in my example. Why? Because I messed up on the date. I got excited about just recording the link and I didn't change the date. So if we go back into it, what I'm going to do then when this happens, and this won't happen if you're working real time as easily because the date will not populate. It'll populate the current date all the time and you'll be okay. If you're working a problem or entering a lot of data at one time, then you got to be more careful than I just was with the date. So we're going to say this is going to be, what I'm going to do then is 2019, and I'll see the transaction then because now I've widened the date field. So the transaction is going to be that 525, this first transaction, which is in 922. So I'm going to double click on that transaction now, and we're going to adjust the rest of it now. So now I'll pick up the other adjustments. We want this to be entered according to our problem in January 25th. The date then, January 25th, 2020, invoice number 3, and we're going to have the terms. I'm going to put in net 30. And then I'm going to update this. It's going to ask you if there's going to be changes on it. We're going to say yes, go ahead and make the changes on it. So I'm just going to say save and close. We're going to say yes, save the changes. Now we're back in the transaction report. I'm going to close out the transaction report and then go into it one more time with the proper date range. Closing it back out. Now we have the 2020 going back into it again. Then we have the 525 on January 25th. If we were to double click on that, then we see that's the total amount including the sales tax. Closing this back out, that amount, the other side of that amount will be on the profit and loss report under the merchandise sales. Double clicking on merchandise sales, we see the 500, not the 525. It's only the amount that we charged for, not the added 500 for the sales tax. Sales tax, where will that be? Closing this back out, closing this back out. Balance sheet and the open windows. We're going to go down to the liabilities where we see the sales tax payable. It's going to be included in this 84. Double clicking on that. We've got the 25 that would be included here. Okay, and then I'm going to close this back out. The other component with this would be that the inventory would decrease. Inventory here going down. Double clicking on it. The inventory is going to be going down by the 400. Double clicking on that. Back to the invoice, 400 isn't on it because the 400 comes from the item list, will not be on the face of the invoice. Closing that back out, closing this back out, other side of that on the profit and loss. Going into the profit and loss, we see the cost of goods sold. Double clicking the cost of goods sold, the expense. There's the other side of the 400, double clicking it, we see the invoice. Closing this back out, closing this back out. Note, you can see all those accounts a lot more easily if you were to go to the trial balance, which I just opened in the open windows, and you can navigate through here a little bit faster if that's better or easier for you to do. Okay, so now we're going to do this again. I'm going to close this transaction report so it doesn't get in the way. I'm going to close that out, and then I'm going to go back to the home tab. We're going to do this for another customer. So once again, scenario, customer came in, this time Gibson, ordered a guitar. We didn't have it. We went to our vendor, ordered a purchase order to request it. Upon receipt of the purchase order, we wrote a check and then increased the inventory for the inventory we had. We linked this together, the purchase order to the check, and the check then we put in the check that it is for a specific customer, as we indicated in the purchase order as well. Now when we go into that customer, it should help us to populate it for us. So if I go into the create invoice once again, this is going to be for the music stuff store. Drop down, we could select it here. I'm going to type it in, music stuff store. That's the one. If I select tab, same pop-up. Pop-up says, hey, select the outstanding billable item and costs to add to this invoice. Yes, we would like to do that. Okay. And then we want to be all the way over here in the items tab, which basically means inventory item when we're in the sales cycle section. So I'm going to select that. That's the one we want. We're going to say okay. Then there is our invoice. Let's tab through it and populate it properly this time. So we're going to say the date is going to be 01/25/20. So January 25th, same date as the prior one. Invoice looks good. Terms, let's put the net 30 again for the terms, and then it populates the item for us as we followed it through and just basically tied it all out. That's going to be the one Gibson SG guitar. Same kind of invoice transaction. What's going to happen with an invoice? Invoice means accounts receivable goes up. The other side's going to go to revenue, sales revenue. The AR is going to go up by the full amount, $816.27. The revenue is only going to go up by the amount we billed, $777.40. Difference, $38.87. Sales tax payable, liability account, and the inventory is going to be going down by amount not on the invoice, but driven by the item list, as well as cost of goods going up by the cost amount. Let's check it out. We're going to go save and close. And once again, it says in the email, I'm going to close this out. I don't want to email later. Then I'm going to say save and close and yes. And then let's look at the trial balance this time, which will be a little bit faster. We know that the accounts receivable is going up. Double click in the accounts receivable. This is going to go up for the music store stuff. Here it is, the $816.27. That's the full amount. If we double click on it, the $816.27 full amount. Closing that back out, closing this back out. Then the other side is going to be in a revenue account. So we go down to the revenue account. Here it is, double clicking on it. We are in the revenue only for the $777.40 this time. The amount we charged, not including the sales tax, the amount we charged. Closing this back out, the difference of $38.87 sales tax, closing this out, will be in the payable for the sales tax payable. Sales tax payable here, double clicking that. We have the payable of the $38.87. Then, closing this back out, inventory is going to be decreasing. Inventory is right here. It should be going down. It's going to be going down, in our case, by the $598. That $598, double clicking on it, not in the invoice. Why? Because it's driven by the lists and we don't want it on the actual invoice, but the invoice drives the amount. closing that back out, closing this back out, other side, in cost of goods sold, double clicking the cost of goods sold, we see the other amount, the $598, double clicking that, once again back to our invoice. Closing this back out, closing this back out. Notice I won't go into it now, but the accounts receivable, if you look in the supporting documentation, we'll have the accounts receivable will be affected as well for what is owed to us by customer, music store stuff in the case of the last customer, and the inventory item list will also be adjusted for the guitars that we had purchased specifically, this being a Gibson SG guitar. And then, of course, for the inventory we sold. So we just purchased the guitar and then we sold it. So we sold this item, so the inventory would be going down by specifically the guitar of a Gibson SG, a GSB guitar. So here's our final numbers so far on the profit and loss. Here's our final numbers on the balance sheet. We're not completed yet, but just as of this point in time. And if you have problems, if something's off, check your dates and then go back into the detail of it. And then we'll take a look at the final numbers for the trial balance, which might be easier to take a look at. You can go through these numbers and just tick and tie them out and then go back as needed or change the dates and do some troubleshooting as needed. Also note that we are making backups for each step, so if something goes wrong and you just want to keep pushing forward with the same numbers, you can use the backup file and simply push forward from that step instead of taking the time to rework everything if something gets messed up. So we should have a set point that you could start from at each step or most of the steps along the way.